Japan. Any exposure to there? I know you do exports to Europe. What's the Japanese market to you?
Yeah, firstly, let me start. I think it's a brilliant set of results. We're very pleased to bring it to the market, but we've got to offer our condolences and support to our Japanese stakeholders in our business, represented by shareholders in some of our businesses, and then customers, obviously, especially Toyota and Nissan, as well as suppliers. The aftermath of the effect, they're going through the human phase at the moment to allow personal time for people to connect with their families, get food and warmth and living security. The second phase that we're going through at the moment with them is determining the supply chain and the effect on the supply chain. But you know, just something that I can offer in Japan, they're very structured, very disciplined, very organized, and I think the resilience that they will bounce back from them in dealing with this disaster will surprise the world. Toyota's only taking out like 40,000 vehicle production out of the couple of days that they've taken out. In the bigger picture, it's a very small percentage. So we offer our support and condolences to what's happened in Japan.
Yeah, that's great feelings, Theo. So, I mean, you do have a small exposure then to the
We
Japanese
don't export
market.
any of our product to Japan. Our product is mostly from the supply side, where we import. We have gone through a phase, so you see the recovery in the results in the years before we had the economic crisis. We were exposed to the yen, so there's been a big drive in the group to get yen free out of the yen supplied base, but we still do have supplies. In our company, we have estimated in the corridor between Osaka and Tokyo. That's mostly where the manufacturing corridor is, and north of Tokyo is a little bit of the electronics or silicon corridor, and we might have 8 suppliers out of that region that could have a sort of, in the next sort of 8 to 12 weeks, an effect on supplies. But we're working through those numbers at the moment.
Let's take a look at last year's performance. As you said, it was a stunning performance. How much of it was due to the strong bounce we saw in the vehicle market last year? How much due to the re-engineering we saw in your business back in 2009?
Yeah, I think it's a combination of both. You firstly got to look at the balance in the group. Our theme for last year was to return balance to our businesses, particularly balance and income stream. If you unpack our results, more than 50% or 60% of our income stream comes from the aftermarket, the non-automotive divisions, and our property section. So there was a big focus after the 2008 financial crisis, because the biggest effect in the crisis was the automotive sales, especially in South Africa. So the group strongly restructured, refocused. We brought balance back into our business to focus on getting more income generation and profitability from those sectors. And if you look at the number, only 150 million of our PBIT out of the 418 was generated from the OE sector. It's an important sector for us. It's something that we say we must nurture, because it gives us technology access. Like we would have never been able to launch our new generation stop-start battery, that we believe even in the events that's happening now in Japan, will take more impetus into the future to launch sort of their technology. So it's a very important technology base for our business.
Is your business more sustainable now to shocks such as we saw over the past couple of years? So if we had to see another big fall off in vehicle sales, would you be able to weather it okay?
Yeah, I think, you know, just if you look at the Metair results, why was it so spectacular, is that we put the fixed cost structure in our business only to cater for about 384,000 vehicle sales. If you look at last year's actual sales, it was closer to 450,000. If you look at what the market's predicting for the year, it's north of 530,000. So we've certain amount of flexibility that we've built in our business to buffer those sort of shocks and to bring the balance, to get more contribution from our aftermarket and our new technology and the green energy field. Our battery business is very, very strong. The performance through that business in the aftermarket and non-automotive sectors has been particularly strong, and we've expanded on that portion of our business.
Tell me how programs such as the MIDP, that's the Motor Industry Development Program, and the follow-on from that, which is going to be the APDP, it sounds like a political party, but it's actually also for the motor industry.
We vote for that party, by the way.
Yeah. Tell me how they have helped companies such as yours and how they position you going into the future.
I think it's brought certainty to this industry. The industry needed a change. I think those changes were sort of a little bit emphasized more by the 2008 crisis. The APDP, Automotive Development and Production Program, brings certainty for this industry to 2020. You can see the results already. The highest capital investment was in the 2006 year of about 6 billion in this industry, and if you go look at last year, they brought it back up to the 4 billion. So it's sort of double the numbers. On average, it's normally 2 billion a year. So definitely the motor industry program replacing by the APDP has brought certainty and structure into this market, where we will see focus on two particular vehicles that we believe will be produced, a sort of more entry-level vehicle and the light commercial vehicles with a focus on export of sort of mid-class luxury vehicles. A very nice balance to the business, and we brought that balance into our business as well to service all of those customers. A big swing away from a big dependency on Toyota only to have a more representative spread of all customer bases in South Africa.
I see you've got parts in two of the new Volkswagens that have been launched into the markets, and also you're working on parts for the new Ford that comes in this year. Yeah,
and then there's Nissan with their program as well. So if you look to the future, I think there's certainty to make investment decisions in South Africa that those programs has brought to the market, and we welcome them. You can see them in the results.
Growing export markets for you, do you have a focus on particularly the African markets?
I would love to say yes. We've been constrained with the growth that we had in the South African market, our re-engineering and restructuring. We've taken a lot of cost out. We've focused on our local market, and with opportunity now we will look to the north, mostly with our aftermarket products, and it's also in line with our strategy to expand that segment of our business. And Africa is definitely growing, and its demand to service that annuity income that comes from motor vehicles.
Of course, as you do grow into other export markets, you are vulnerable to what the Rand does going forward. How has the Rand affected you, both with parts you have to import, but also for exports?
I think the big effect of the Rand lies in one line only: competitiveness. And I think if you invested in a company that's the most competitive in the world, it's a very good aspect of a business. So we see it as a positive effect. We react to it, we take the cost out. We want to be the most efficient, cost competitive possible business that we can be in every sector that we service. So Rand competitive, we actually welcome. It's a positive. The positive of it, if it weakens, is that it obviously falls through to the bottom line.
Prospects for this year, you already talked about NAMSA predicting 530,000 vehicles being produced in South Africa this year. How do you stand to benefit from that?
Yeah, we sort of a little bit more conservative. The market consensus of 15% growth. We plan our businesses more in the 6 to 8% growth levels because we always know there's events. Japan's just showed us that there is events. So we're very comfortable with the level of growth that we see coming from the market, a little bit more conservative compared to the market as a norm.